Hello and welcome to FF News' coverage of FinTech Connect. Now in its 10th year, we're here to celebrate the brilliant and must-attend event here in London later on this year. Wasim, for our audience who might not have met you before, could you please tell us your role and what you'd been working on previously?
Sure. I mean, I'm probably 18 years in the industry now. My last kind of role was former transformation lead in financial markets at Standard Chartered. And I was responsible for quite a lot of change and strategic within the group. It was impacting all 44 of the 45 regulatory markets, and most of my teams were outside of the UK. Prior to that, I've had stints in fintech and SME lending. I was Director of Operations and Projects for a fintech SME lender. We did the receivables lending. I built the whole operations kind of infrastructure to support that with the British Business Bank. We were one of the first initial 42 lenders.
Wow.
So it was a very interesting kind of time to be there. Prior to that, I had a good 8-year stint at Barclays. 4 years kind of in their operations kind of department, more of like a COO office and credit, and then 4 years in their CIO office, which I did large, big ticket kind of transformations between product, process, platforms, technology, and a few other things as well. So it was interesting. Prior to that, back in the day, I was in RBS in their kind of loans and lending kind of departments.
That is such a studious history of finance. I mean, so excited to get some of your insights because you've really got the expertise. And with that in mind, one thing that people love talking about is embedded finance. And I really want to know, because everyone has different perspectives on it. Before we find out more about what's happening, could you please actually tell us, in your eyes, your idea, what is embedded finance and how is it going to be so transformational?
It's a really good question. It's quite open question as well, because I don't think there's a fully agreed industry definition of it, and everyone likes to focus in their own ways. For me, embedded finance is finance that is less frictional.
Yeah.
And I think that's the main piece that everyone agrees on, to reduce the friction. And the main aspect or how that happens is really through more seamless customer journeys, all right? So that seems to be an agreed kind of a wavelength of like a definition. From there, because finance is so big, it's various streams. You could move into the payments world, or it could be lending, it could be investments, it could be mortgages, it could be other products, and so forth. Example, a lot of people talk about this one as like the example, which is like Uber payments. You walk out the taxi and the payment is taken, right? I mean, right? Which I think an earlier form of embedded finance probably you could have said was like in Amazon when it was the one-click purchase.
Yeah.
But it's not. But that's not really embedded because there's still operational teams in Amazon trying to fix it, and then you might get like a pop-up on your mobile phone. Is this coming in? Is this correct? Sometimes it fails. But I like to kind of think a bit more embedded finance because I'm like a product person as well, and operations and transfer and platforms. I like to think of embedded finance as being for banks or fintechs to be able to offer existing customers other products and other solutions via, let's say, an existing customer journey for a product, but then it could be a pivot point and then it can go to another product or another service. And that is quite seamless and less frictional because you're already done your AML, KYC, you've already got the information, you're not having to double input anything. And then from there, you can provide other use cases or opportunities to upsell or provide other products. And I think that's where embedded finance is intrinsically connected to, let's say, open banking or open APIs or banking as a service, because it's all kind of connected through this kind of, I would say, kind of hyper connectivity information kind of loops. And I think that's where it gets more interesting for me.
I think it's absolutely brilliant, and you're so right to point to how it's kind of everyone has their different perspective on it, and depending on what they're focusing on, but also just how it's transitioned itself due to customer demands. For instance, starting out with payments, Uber, Amazon, and now what it could mean on the regulatory side of things and everything like that. It's a brilliant, fluid system, and I'm excited to see where it's going to go in the future. And with that in mind, then, what is the actual impact? What's the hard line that it's going to have on fintech banks or even just fintechs as well?
So, I mean, I consult with quite a few startups, right? And I give them, from an advisory capacity.
Yeah.
And, I'm technically an ex-banker, right? So I've seen it from the other side. So I've been a buyer and I've been a seller, because I've been on both sides. And I've also run transformations where we've outsourced certain aspects in banks. What I see is that for banks per se, it gives them the opportunity to increase their customer demographic. And what I mean by that is that it gives them the opportunity for their customers to become, for their customers to become their customers. And what that means, let's say in corporate banking world, you are providing your big institutional clients, services and banking capability, perhaps some platform as a service, or some aspect of that from a white label perspective. Then you offer your corporate client the ability to offer loans, or to offer products that would normally require them to have a banking license or require them to have some type of setup, right? And this could be also kind of loans from a credit underwriting perspective, right? So by offering that capability, first of all, you offer your existing corporate client the ability to improve their own, I would say, propositions for their clients, but also it offers the bank the ability to have a slice of the revenue, or potentially further cement the relationship with the corporate banking client. I'm just using corporate banking as an example, but what that means is that for banks, rather than go out in a kind of a red ocean industry trying to get existing clients, you can use your existing clients to funnel and find other opportunities. That's why banking as a service is a real play for a lot of the banks that have the platform and the technology to deliver it. For those banks that don't have that, they have too many operational issues, or their platforms aren't seamless, or they don't have, I would say, transaction cycles or centers of excellence. I would not advise banks to then go down this route, because if you can't at the moment even provide your customers a good, clean service, you don't want to complicate matters by having additional SLAs and additional clients on that.
Yeah.
But that's from a bank's perspective. From a fintech perspective, what it does is, and kind of using I would say, the open banking infrastructure and open APIs as a base, it gives them the ability to also offer products. They don't have to build everything themselves, but it's more of a white label. And as a result, because everything's about the CX and the UX right here, and the UI, sorry. And fintechs are known to be probably better at that. So leave all the boring stuff to the banks or the regulated institutions, but then the regulated institutions, and then on the other side, focus on the customer journey and the client experience and the apps, and give them the ability to tap into that market. And I think that's where I see it's not fintech or banks, it's very much an ecosystem play. And I see a lot of banks strategically work with fintechs, and fintechs strategically work with banks. So I think it's a win-win. And the whole point here is that you offer your clients something better that they didn't have before, didn't have access to. So that's the upshot in terms of the wider play here.
It is a fascinating balance to see that kind of the regulatory compliance with the very exciting front-end changes to the new products that can bring out. And I love this idea as well that you brought up of how almost embedded finance is going to be like a word-of-mouth advertising element for fintech customers and customers of financial services as a whole, being able to say, well, I need you to follow through with this financial payment, it's going to go through this bank. And it's amazing how that's going to connect. Now, with regulatory movements in Europe constantly shifting, especially in payments, I mean, embedded finance has come about because of the Payment Services Directives. We're going to have Payment Service Directive 3 soon as well. But when it comes to then balancing that with the customer data transparency, the education and control, what is the next couple of years going to look like for embedded finance and the regulatory landscape?
So it's a good question. We do PSD3 is going to be coming, and and that will be interesting for a lot of banks, especially for banks that are kind of doing business in Europe.
Yeah.
What I would say is that as bankers or people in finance, we love labels, right? We can't get away from it. I would like to see a situation where we don't talk about embedded finance. That's just the way it is.
Yeah.
It's just known. It's kind of similar to what we talk about open banking. Like we talk about open banking so much, and we're trying to explain it to customers and the positives. We should get away from some of this terminology and just say this is banking and this is the way it works. In terms of the next landscape from a regulatory perspective, within the UK, I mean, just a few weeks ago, at the IFGS, Andrew Griffith had the economic secretary to Treasury had announced the report from JROC, kind of plus 50 pages long, but it was created from a wider report from the strategic working group that had a lot of focus groups had happened kind of last year, and the industry was waiting for this. It provides kind of 3 priorities and like a roadmap of 5 main kind of sections within like a 2 to 3 year landscape, and I think that's probably going to be a focus in regards to open finance and VRPs. And just improving the infrastructure. There's elements of improving infrastructure and reliability in the wider API ecosystem, but also then reducing fraud and giving I think the consumer protection from a liability perspective. Like in terms of like on cards, you've got chargebacks, for example, and you've got direct debit mandate, but for account-to-account transactions, it could be a bit more complicated. But what I see the big play here, so a lot of people, there's going to be a lot of focus groups. There's not like this is going to happen X, Y, Z, and we will go live. It's more like a roadmap, but still it needs to be delivered. But what I would say is that it provides a focus now for the industry who've kind of been waiting for around the 2 to 3 years on what's been happening. UK initially, if you go back 5 years now, or maybe 6 now, technically, open banking implementation entity and launching, the UK was seen as the global leader, the front runner. A lot of people, a lot of countries, I would say, have kind of like, I would say, maybe taken over the UK, have moved straight from nothing to open finance kind of world. And I think this is about the UK trying to get back clarity on being a leader and having a roadmap to get there. There's still a lot of things to get through. It's not like this is mandated now and this is the CMA order. There isn't that. And I think I've been observing the industry comment on this. Some have been very positive, that it's great, we've got a roadmap now, we're going to deliver it, people are going to come together. And there's still been a lot of naysayers as well, saying, well, it's not gone far enough, there should have been more. I mean, I see it from both sides, but I also understand that it's complex to deliver this. We have a complex regulated structure, and it's there for a reason. And whilst innovation is great, there is governance to slow down innovation to make sure it's the right type of innovation. So for me, it's not like regulatory-led or market-led, it's a spectrum. And where do you fall in that spectrum? And even that, when we talk about open finance, there's a spectrum between like loans, SME loans, customer loans, mortgages, investments, pensions. There's various levels where you should think more on the regulatory side or more on the market side. So I'm very interested to see how this plays out. There are also other entities that are live now. For example, CFIT, the Centre for Finance Innovation Technology, they've recently announced that their first coalition focus will be more for open finance for SMEs and customers. So I'm interested to see how that plays out as well, and what are the key outcomes of that, and who are the coalition members. It's definitely an exciting time to be in finance now. We've got this new wave. You've got the Data Protection Information Bill. I don't know if I've said that right, but there's the Smart Bill. A lot of people talk about open identity as well. So I'm really, I think it's a great time to be in the industry. I'm happy to be part of it.
Yeah.
I speak to a lot of people as well who are, I would say, very senior in the industry, who are got more other insights. And I think I would say watch this space, but there's a lot to play for as well. as well. And I think there'll be new propositions, there'll be new markets, there'll be new opportunities, new customer demand. Like, who knew through ChatGPT there'd be so many other options? And I think that's what innovation is about. You know, something happens and then it creates a spark and new innovation can happen on the back of it. So yeah, I think that's very much going to be the roadmap the next 2-3 years and the focus for a lot of the players in the UK. The only thing I would say is that there's nothing in the JROC kind of report that says it's mandatory. There are dates to hit, you know, and I think that is the one thing I think that we need to get to state that something will be mandatory. So it's above and beyond like the CMA kind of 9, kind of the order, and waiting kind of 2 years for VRPs to kind of go live, or you know, as an output. I think we could probably try to front load that. And for me, the biggest use cases are not just the sweeping VRPs, which are kind of already kind of live, but it's more the non-sweeping kind of VRPs, which opens up more use cases. For example, e-commerce, pure account-to-account, one-click payments, or paying online for subscriptions. That's where it's going to open up. I think e-commerce is one of the biggest use cases. Yeah. And once you get that, I think it was a report recently, you know, it was 7.5, then it was 9 million open banking users. You get that VRP working for non-sweeping use cases. I think that will accelerate exponentially, and I think that's what everyone knows in the industry. And I think, how do we get there?
Amazing. Now, I've got to ask, what are you going to be talking about at FinTech Connect 2023?
Interesting, yeah, because I've not locked down all the agendas. I mean, I'll probably speak to the event coordinator, but I'll be likely speaking about open finance or open banking, probably on a panel. Last year, I was lucky enough to present a keynote on open banking to open finance and the journey ahead. This was, I think, well, it was before this report, obviously, and I'd kind of maybe made some predictions that what would be covered. So I think I got a few of them right. So I think more of that, but I think also more in the embedded finance piece, banking as a service, something that really interests me. And deep down for me personally, like I would say I have an SME skill set in credit and lending in all its forms as well, whether it's in a bank or fintech, whether it's pre kind of sanctioning or kind of arrears management. So I might be talking something about lending and credit as well. I think that seems to be a topic that a lot of companies come to me for advice, so maybe about that as well.